you are concerned, markets breathing this sigh of relief, you're still concerned about the rise of nationalism, about anti-trade, anti-globalization in Europe.
Absolutely, and more as a long-term trend rather than sort of a short-term outlook. If you look at the French election in '92, when basically the Front National made it to the final, they had roughly 3 million supporters. Now it's been 11 million. And so there is a rise in these forces, and the bigger concern for me is not really the immediate future. I think the immediate future will see a relief rally for the euro. We'll also see some stronger data coming out of Europe. PMIs are very high. So I think there's no problem sort of for the rest of this year. But we'll move into Italian election next year, and there's a very strong anti-European sentiment, anti-Euro sentiment. So there's more problems ahead. And actually the British exit, the Brexit, is a countdown that is happening now with problems that will only be solved in the 12th hour. So there's more volatility ahead over the next 2 years at least for Europe, and that's going to be a rocky road.
You actually raised the possibility when you were talking about this earlier that Brexit is much more than a risk to just the UK. It's a risk to all of Europe potentially, a big one, you said, that could hurt the economy and even spill over into global markets, global economy. What is the chance of that, and how is that going to happen?
It's like every event. Markets are really not good at pricing binary events. Binary event could be a hard Brexit, and from what you hear from the British government, they want to have influence over immigration, so they're not part of the common market, and they want to have trade agreements with the rest of the world, so not part of the customs union. That is the definition of a hard Brexit, and there's very little on the continental European side that will be coming forward to accommodate that British exit. It's self-chosen, and so I think there will be a pretty hard exit at the end, and that will have very negative repercussions on Europe, on both the continent and on the UK, and it will spill over continuously over the next 2 years into market volatility. Every speech the Prime Minister gives, every election outcome will be priced by market, and so there will be ups and downs, short relief rallies, more concerns, and it'll just emanate volatility into European markets for 2 years to come. And banks like us have to choose strategies that will basically make sure that we can be of continuous service to our clients throughout Europe, both in the UK and in Europe.